Hello and welcome to Tech Circle. This is Vignesh Anantraj and you are listening to Tech This Week, a weekly analysis of major developments in startups and enterprise technology ecosystems in India. With me are Supriya and Binu, and today we will cover how the slowdown in BFSI is bringing down India's four big IT services companies, Bounce raising another huge round, and Zomato gobbling up Uber Eats. Starting off with Bounce, and they've raised another huge round, and I just met the co-founder recently. They just expanded into Hyderabad and they're trying to expand it to a lot of other cities as well. So Binu, what's happening with Bounce?
Yes, Vignesh, Bounce has raised a large round. They've closed the Series D round at $105 million. And this round has taken the valuation to $500 million, and the startup is just 5 years old. So Bounce is one of the most funded company in this particular segment, and they have a very strong set of investors, including Facebook co-founder Eduardo Saverin's B Capital, Axel Partners, Chirate, Falcon, Maverick, OMDR. So they are strongly funded, and then they're going to. I think they have a good market ahead.
How is the bike rental market actually grown, and how much opportunity do these guys actually have?
So Bounce is looking at a large market because India is predominantly a street bike market. The use cases from a sustainability and urban transportation point of view is very large. There are many use cases. Because primarily the commute is broken in India, and there's a huge opportunity if you're addressing the last mile challenge in India. Besides, two-wheelers are faster to navigate through the traffic, and it's way less expensive compared to cab hailing. So the business as it is makes sense, and it's a huge market.
And I also think they definitely have the technology to back this, because when I spoke to them, he spoke about how it's filled with sensors, and from the time they put the key onto the bike until they drop off the bike, there's not even one Bounce person involved in the entire scenario.
Yes, that's true. And besides the technology, they're also looking at profitability very seriously.
That's the most important part. Great technology is great. You have a market. You're able to market. Tell us a bit more about the entire cash intensive process.
Yes, Bounce clearly understand the cash burn is very high here. So they're looking at different models now. So Bounce is eyeing a platform play, looking at offering tailor-made mobility solutions to the new markets they're getting into. They're also partnering with offline shops and merchants to expand the network in a very less expensive way. And most importantly, Bounce is building its own ecosystem of electric vehicles so that they can cut the prices down.
So these are indeed exciting times for bike rental companies and two-wheeler aggregators, and they might be a refreshing change from the expensive Olas and the Ubers. And talking of Uber Eats was recently acquired by Zomato. What's happening there, Supriya?
Big news coming in this week. Zomato eats Uber.
Oh, that must have been tasty. Okay.
But wordplay apart, the all-stock deal gave Uber a 9.99% ownership in the and financial backed Zomato, the one of the last remaining players in many ways in the entire food tech ecosystem of the country. And so 2019 per se has been very interesting. Before I moved to the deal per se at hand, so you had Zomato's problem in the beginning of the year with the entire vendors, and
So the market has just two dominant players now, and how is it going to shape up from here onwards with just two players?
Right. So I have 2 points to make here. The market share, like you rightly said, gets very skewed. So unlike Uber, Zomato will likely stop its expansion. I mean, in terms of the expansion that it has on a horizontal basis. So companies like Swiggy and Zomato, despite the many variations that they may have in terms of the models of the business, they operate B2B, B2C, they will still try and stick to the DNA of the company, which is food. And this is very unlike Uber, which is trying to do a lot of things in hand. But of course, India is not like a lesson in many ways, because there are emerging economies in Africa where Uber is still trying to make the Uber Eats business really work.
So Supriya, this has to be the biggest consolidation yet in the food tech industry in India.
Right, so I was arriving at
The food tech startup industry.
Yeah, right. So I was arriving at the second point with that perspective on the entire all-stock deal. So the last time we really had something close, if not just as same in terms of the valuation, was the entire change of hands with the Food Panda business, which interestingly went on to add on to Uber Eats headaches in many ways at one point of time. And we saw what happened there. So it wasn't just a change of hands. So there's a lot that goes into these mergers, especially with companies that are just doing one thing. There's the entire change of DNA. There's the entire change of the entire way that they're looking at a geography, at the culture, and food especially being such an integral part of a country like, say, India. But personally, in terms of the economics of it all, I think all of these companies are really just biting off more than they can chew.
Supriya, Rome wasn't built in a day, right?
Yeah, there's also that way of looking at things. So even Elon Musk wasn't built in a day that way.
Right. So now moving on to the enterprise technology side of what happened last week. 4 big IT services companies, TCS, Infosys, HCL and Wipro, reported their December quarter results, and one picture has increasingly become clear. There is a slowdown in technology spending by the banking and financial services firms as well as retail companies in North America and Europe.
That's worrying. The BFSI segment, if I'm not wrong, forms a large chunk of the earnings, right? With all these IT firms.
Large chunk, definitely. The sector contributes to a little more than 30% to industrial revenue, and hence a slowdown in the space is going to hurt the companies. Say, even if the other verticals like healthcare and aviation and everything else report good growth, there is just no escaping a BFSI hit on the top line. So even TCS, the Tata Group firm, which is also the second largest pure play IT services firm globally after Accenture, has seen 2 consecutive quarters of single digit growth. This is highly unusual development for the IT firm, even if we account for the base effect finally catching up with the bellwether. In fact, Infosys is now consistently reporting better results despite a whistleblower controversy, and it shows that the Bengaluru-based IT firm might even become the industry bellwether if the trend continues for a few more quarters.
Right, and that also came along with this entire clean chit that the company gave itself via committee, of course. And but generally, Vignesh, the quarter 3 isn't a very it's not very, but it's generally a weak quarter, right? Because you have this entire furlough of the Christmas holidays, the Thanksgiving.
Of course. While Q3 is a seasonally weak quarter for IT industry due to the long holidays in the West, the impact of the sector stress was very clearly visible. And Q4 will show whether the pain will persist or subside. We'll wait and see. That's all we have for this episode of Tech This Week. Make sure to visit techcircle.in for the latest videos, features, news and insights into the world of startups and enterprises.